You had some other thoughts about myths and kind of landmines of buying a business. Let's go to some of your thoughts on that.
Yeah, as the opportunity has opened up for people to look at buying businesses as a strategic direction shift for either capital allocation or time focus to build personal wealth, I think there's been a rush to get businesses to market. And the quality of the due diligence is all over the place. And I mean the due diligence from the sell side. As a prospective buyer, you could, if you're sourcing deals off of an internet marketplace, there are so many opportunities for you to blow a leg off on some landmine that you thought maybe you would have uncovered during due diligence, but that was strategically positioned so that it never came to light. I mean, old tax issues is a huge one that I've seen where people have bought.
Welcome to the Exceptional Companies Podcast, a podcast for purpose-led entrepreneurs looking to master the art of buying, selling, or optimizing small businesses. Your host, Chris Seegers, founder of Exceptional Companies and author of Selling Main Street, has over a decade of experience starting, buying, and leading successful businesses. He's here to guide you through the complex world of business transactions and growth. Each week, we dive deep with actionable insights, expert interviews, and real-world strategies to activate and equip you to live exceptionally and build exceptional businesses. Now, let's dive into today's episode. Here's your host, Chris Seegers.
Welcome to the Exceptional Companies Podcast, where we discuss how to buy, sell, or grow your business. I'm joined today by my recurring guest, Greg Wiggins. Greg, welcome to the show, brother.
Appreciate you, Chris. Thank you, man.
So this podcast was prompted just out of some discussions and some things we've seen on social media that we believe are false. So the focus of the podcast today is going to be the top myths and landmines of buying a business. I think generally in social media, everybody is saying anybody can buy a business. Everybody should buy a business. Quit your white collar job, your tech job, go buy a business. Any kind of business is fine. And so we wanted to dig in a little bit about that because I've had two really good friends get into businesses that it has not gone well for them. And as I went through and talked to them about some of the mechanics of the business and where they stand today, I said, man, there were some big red flags that could have been avoided had they had good advisors helping them. So that's where I want to start. The first myth number one that I want to dig into is I think there's a lot of real estate investors out there that think owning a business is a passive endeavor, just like they say real estate is a passive endeavor. We own 9 different businesses. We own a bunch of real estate as well in almost every asset class you can imagine. And neither of those are passive. Neither. There's always going to be work involved. I think real estate you can get to be semi-passive, but I think business is not that way. So that's myth number one. Buying a business, if you're trying to do something that you believe is passive, buying a business is not for you. Now, we believe with the right systems and structure and utilizing a system like EOS or exceptional systems, that you can get a business to where it's self-governed and you're working on the business, not in the business. But I always tell business owners, if you're not involved in your business day to day and keeping an eye on it, even if it's 5 to 10 hours a week, you are a negligent business owner. So that's myth number one. I think if you're looking to do something that's passive, you need to invest in the market or do something else where you literally just invest your capital. You have somebody take an eye on, keep an eye on it every couple of weeks and you let it roll. So I don't believe buying and operating a business is passive. So Greg, I want to kick it over to you because we believe culture and people are the most important piece of business. Jim Collins talks a lot about, hey, if you don't have the right people on the bus, it doesn't really matter where you're driving that bus. It's not going to go. It's not going to end up where you want it to. So talk to me a little bit about culture. You've had some experiences recently with some different endeavors and learned some lessons there. So talk to us a little bit about that piece.
Yeah. So before I get on that, I want to touch on the point that you just made. Buyers have to get very, very clear about their expectations stepping into a business. And what I mean by that is if you think, to your point, you're going to buy a business and it's going to run itself, that's not the reality. Both you and I have worked in businesses, worked in our own businesses, and I think you'll agree. There are times it's nice when you leave at 5 o'clock that you're done with that working in somebody else's business. And if you're stepping out of that without the full understanding of when you're stepping into your own business, there's going to be nights when you're at your dinner table at midnight because an employee's quit or you have an insurance requirement that's not been met. The struggle of running your own business is real, and especially when it comes with other people, because now you're responsible not only for yourself, but for them, their families, their well being. And that ties directly into culture. You've got people, men and women that are well meaning, that I think generally 99% are good people that step in and try to
Mhm.
buy businesses. But when you come out of real estate development, or you come out of an accounting background or a white collar service industry, and you're buying these quote unquote boring businesses, you better have a full understanding of how you're going to lead a team that is different from the environment that you've worked in. If you're buying a HVAC service company and you've got guys that have maybe got their associates, maybe they've gone through trade school, they come with a whole host of advantages and potential landmines that you're going to step into just from a culture standpoint. And so you better also be clear about these are the people. And when I say people, these are the roles that I'm going to be managing. Do I have the skill set, one, to earn respect? Because you're not going to step into a blue collar business with, you're not the white knight riding in. You're the outsider coming in that's going to have to prove their worth to these people. And you're going to have to prove that you understand the scope of the business, what it takes to run that business, to develop the trust to get people to buy into you. And I don't know that's really evaluated or understood up front.
Yeah, absolutely. And I think touching on that, buying boring businesses, I get, I don't know, probably a half dozen calls a week from folks that are coming out of the finance industry or private equity that want to buy and roll up. I am very clear. I don't believe private equity roll ups will be successful. I think it's a financial manipulated strategy where they grow EBITDA and they try to get that to a certain range and then they smash it together with other companies and then they grow that to a higher valuation and then they exit. I don't think there's a lot of value that's being created there. And so when those guys or gals call me and say, hey, I'm leaving my job, I'm interested in buying a business, I ran this team, I really dig into that's awesome, right? It sounds like you've got some exceptional competencies. However, being an employee and running a team without your own capital or downside risk, without your home on the line when you sign that debt note is a totally different thing. Even if you've had a ton of success. Hey, I ran 5 portfolio companies and they did really, really great. Well, if you didn't have your actual capital to where it could bankrupt you and you weren't the one driving that thing every day, it's a different situation. Now, that's not to say that those people can't be successful in this industry, in the business acquisition space. However, I always caution them to say, hey, go through our clarity tool, go through this plan. We've got a bunch of programming that helps people really understand why are you doing this? If it's just for cash flow, it's not the best fit for folks. If you really do want to grow a business and bless people and build a great culture and grow the thing and put in the hard work, where I think anybody can do it with the right skill set and the right setup. But I think people go in maybe with some different mental models than what would be useful. I think myth number 2, and this ties into the not passive. We have a lot of folks that bring us deals outside of the state where they live in. And especially if they have a family, I say, hey, you got to really walk through the logistics of flying out to a new environment, right? So you have no network, no social circle out there, being away from your family, and then trying to scale and get loyalty with this business. And I think there's a lot of folks that are like, you can buy a business in any state as long as it's healthy and that sort of thing. But if you've never bought a business, I wouldn't recommend that. I'd try to find something that's in your geography, or if your family's open to it and it makes sense, you move to the space that you're going to build that in. Now, once you've done 2, 3, 4, 5 deals and you've owned a bunch of businesses and you know the system for how to onboard it and the downside risk, then that might be a different conversation. But I think that's one that'd be myth number 2 is I think you really ought to focus for your first acquisition on finding one somewhere in the geography that you live in. And the third one that I think is tying into that culture piece is there is a huge difference between white collar service companies and blue collar service companies. And I think that hasn't been addressed well in social media or on the internet. That I think there's a lot of folks that are like, buy these dirty businesses and you're fine, right? Like a porta potty company or a septic company or, a plumbing company. I will tell you, because we've worked in both those industries and grew up kind of working in both those industries, the people in either of those camps are very different. How you coach them is very different. How you approach them is very different. The level of autonomy is very different. And so I always tell folks, hey, what are the skill sets you have and what are some of the industries you've worked in that you know really well that you could just you would have a lot of momentum going into it, as opposed to, hey, I have to learn a new industry, plus I have to learn how to run a business, plus I have to get loyalty, plus I have to take care of my family. So I think let's touch on that a little bit, Greg. What are some of the differences you've seen, because you've been in both spaces as well? What are some of the differences between white collar service companies and blue collar service companies that you need to be aware of if you're trying to acquire one of or the other?
Man, that's a really good point. That deserves a podcast in and of itself. The stepping in to any business, unless you're potentially buying a SaaS business, businesses are run by people. And if your career has been made sitting behind a desk running spreadsheets, maybe you've run teams, but you've never made a service call. You've never been the one crawling under a crawl space to spray for, bug treatments. You've never been in an attic handling HVAC type stuff or been with somebody. I don't think you have a true understanding of the real challenges that are encountered day to day in that business. And most people are not able to instantly step in and understand what needs to be optimized for that business. Because the myth was, find a business that's still using a fax machine. You can step in, overlay this tech stack on top of it. It's going to run itself and you're going to be great. Businesses are still run by people, and people have needs that have to be met by those that are in charge of the business. And I mean, the people are different. A welder is going to be different than a project manager. A coder is going to be different than the guy that's making service calls for your HVAC company. It's just, you have to understand people at a base level.
Yeah, absolutely. I think that's right. And we actually had a conversation about different clients and how we approach our implementation phase. Because if you go into a blue collar service company, now some of them are very advanced and have, younger leadership teams and are with the times and utilizing AI and tech stacks and that sort of thing. But a lot of them, one of our clients, for example, is still doing paper invoices and it works for him. But if you come in there and you say, hey, we're going to implement a CRM system and an invoicing system, and we're going to automate this, that, and the other, that gap in knowledge is so far apart that you're really starting with, hey, we actually need to just utilize Microsoft Office. Like that's where we're starting, right? So I think you're right. People come in and they're like, we're going to just throw all these things in and innovate and that sort of thing. But you're so far away in that understanding of technology. And the team, you got to think about this. The team is going to mirror the leader of that business. So if the leader of that business is, in their 60s to 70s, and isn't as familiar with technology, doesn't mean it's right or wrong, but just isn't familiar, hasn't decided to implement that. Most of their team has probably not utilized it either because it's not a value in that business. So not only do you have to come in and understand how to build loyalty and trust with your team, but you're also coming in and saying, hey, we're going to make these changes that are fundamentally different from how they've run that business for the past 10 to 20 years. And so what we did really poorly when we first started is we would come in like a bull in a china shop and just wreck everything and create way too much change. And as I look back, I realized I lost some really good team members that I wish were on my team still because the rate of change was too quick. And so now we have a saying that we use all the time, brick by brick. We come in and we say, hey, we want to just lay good bricks every day. And that may just be the first quarter or 2 quarters may just be saying, hey, here's some changes that we're considering. Here, we want to get your guys' feedback. And so our timeline, we've really extended Before, we used to try to say, hey, let's get things dialed in within 6 to 9 months. We'll have EOS running and we'll have everything really, all our scorecards and our meetings and everything dialed in. Now we've said, hey, let's extend the timeline. Let's get it to a healthy place and then really just start having conversations about these tools that we're then going to implement maybe one thing. When we run our systems, exceptional systems or EOS, for the first 6 to 9 months, we actually don't tell anybody that we're doing the things we're doing. So we're not explaining about our quarterly goal setting, our rock setting, or our level 10 meetings or the VTO or anything. We're just kind of starting to do some of that at kind of the corporate level. And hey, we're going to do this meeting a little different. Hey, we're going to start doing some goal setting for both personal and professional. But we do it in a way that's a lot less, hey, we're going to start this system. Everybody get on board. You need to read this book, that sort of thing, because I think the gap is too big. Now, let's switch to white collar service. There's some businesses we've bought that the folks, if you give them the book Traction or you give them my book and you say, hey, if you guys can read this, we'd love to start thinking about it. There's some businesses and folks that are like, I'm in. I read the book last week. Here's what I think. Let's go. And so really understanding the culture of both those industries and just that gap in knowledge of, hey, here's where we operate and we want to get everybody to that level because we want them to have exceptional lives and we want to build exceptional businesses. But just seeing that gap and really like writing that out and saying, hey, okay, if we want to get here, we really need to slow down and take the time to build that loyalty and trust. So I think as a potential buyer, and I coached a buyer 2 weeks ago that was looking at blue collar service companies and really didn't have a ton of time. He was going to be working maybe 5 to 10 hours and his wife was going to be running it. And neither had experience in that space. And I was like, this is just my advice. You can take it or leave it, but I think it might be a better fit if you find something that is more in the white collar service sector, just because of the dynamics of how that blue collar service looks. And those guys want you in the field. If you want to earn their trust, you got to be in the field. We evaluated a commercial pool construction company that ended up not being a fit for us. And one of the first things I did is I said, hey, I want to be out on every project. I just want to go out there with you guys. I don't know what I'm doing. I'm going to be really honest with you. You need to tell me where to stand and how to be safe. And I just want to go out there and understand what you're doing and how you do business. And within a few weeks, those guys, they were joking around with me and I could tell, hey, I built their trust because I went out there and just said, hey, I'm here to try to help you solve problems. And let's see if we can do that together.
Do you like what you hear so far? Make sure you never miss an episode by clicking the subscribe button now and check out our website, www.excoadvisors.com. This podcast is made possible by listeners like you. Thank you for your support. Now, back to the show.
So let me kick it back to you. You had some other thoughts about myths and kind of landmines of buying a business. Let's go to some of your thoughts on that.
Yeah, as the opportunity has opened up for people to look at buying businesses as a strategic direction shift for either capital allocation or time focus to build personal wealth, I think there's been a rush to get businesses to market. And the quality of the due diligence is all over the place. And I mean, the due diligence from the sell side, as a prospective buyer, you could, if you're sourcing deals off of an internet marketplace, there are so many opportunities for you to blow a leg off on some landmine that you thought maybe you would have uncovered during due diligence, but that was strategically positioned so that it never came to light. I mean, old tax issues is a huge one that I've seen where people have bought one guy. There was a business that I was personally looking at. It was a tram company in Texas that worked on lakes. And it took me 2 to 3 months digging into financials and asking the right questions before I finally understood that there were some significant liens levied against both the individual and the business from a tax standpoint that could have been problematic if I'd have stepped into it. So things like tax issues, things like trying to think of I'd ask you, what landmines have you seen? Because if I'm a buyer, I'm looking as thoroughly at the team and how the deal was vetted as it got to market to really qualify the deal. Because there may be a data room, there may be 4 or 5 documents, but if quality A&D advisors like EBA or others, have looked at it and have really taken the time to walk through the planning process with the owner, you're going to save years, and I mean years, of headaches by having a deal fully vetted and qualified before it's brought to market. So that's really the main one that I see. And as this opportunity market, I think as it matures, you're going to see a standardization of quality that's expected from buyers and from sellers that are taking deals to market. But it's not there now, and people have to be really, really careful with that. So my question back to you is, what opportunities or challenges have you seen in businesses that are coming to market that buyers need to be especially on guard or looking for?
Yeah, I think that's a great segue. I think we believe still that old saying, a deal is made or broken on the buy. I still believe that, whether it be real estate, an oil and gas deal, or a business. And what we found is buyers get loss aversion bias, where they say, I've been working on this deal for so long and I've spent, a few $1,000 on legal fees and I've spent X amount of hours on this deal. We just got to get it done. And that's why we offer buy-side consulting to help people evaluate deals. And really, it's kind of a loss leader for our company. But we've found that we can go into, the data rooms and almost in 10 minutes say, yeah, this is a decent deal. Let's actually run it through our valuation model. Or no, this is terrible. And we want to help buyers avoid buying a bad business. It's so dang hard to run a business you didn't start, no matter
Yep.
what. But when you buy a bad business or a business that just fundamentally has flaws in the economics or whatever it may be. So we always say, and we've said this on almost every podcast, because I want people to think about this framework, the 3 Ps, evaluating the people first, the processes second, and the profitability third, and not in that order, but just those 3. So when we go in, the first thing I want to look at is is this deal even financially make sense? Right? Is the multiple too high? Is the cash flow too low? We want to run that through our valuation model and understand if the buyer says, I need $250,000 of net cash flow after debt, is this even going to touch that? Most of the time, it's a no. So we can do that valuation really quickly and just say, hey, based on tax returns, P&Ls, bank statements, boom, this is not a fit for you. That doesn't mean it's not a good business. It just may mean that it's overvalued. And so I always tell people, hey, don't just give up because the LOI you sent wasn't received. You could go back to them and just say, hey, look, here's our model. Tell me where it's wrong. Tell me how we improve the economics, because I've got to take care of my family and make sure that I take enough money home to support my family. We've got to pay our debt and we have to have capital to grow the business. So we really dig into that first. And I want to set people up with a layup for their first business that, hey, it's going to be hard. No doubt it is going to be really hard. But the worst thing is you buy a business that's overvalued and your cash flow is too low. And then not only is it just hard operationally, because people are going to quit on you, sue you, steal from you, et cetera. But now you've got this whole financial thing where you're not even making as much money as you were before, and you're in a really bad spot. So that's one of the things. The other thing too, that is a huge pattern with buyers is you've got to have cash. So we've gotten, I don't know how many emails on our listing of, hey, I want 100% owner financing. I don't really have any money, blah, blah, blah. Number one, the banks aren't going to finance you. Number two, you're just putting yourself in a position, even if a seller agrees to do that deal, where you're going to go bankrupt. You're going to have to file personal bankruptcy because you need to have the cash flow for the problems. So I think if you brought in investors, there's plenty of ways that you could still come in and help run a business and get the experience. But if you come to the table and you don't have the cash flow, even to buy the business, you're in a really bad spot. I want you to save up enough money where you can hire somebody like us to help you with the business valuation and onboarding, where you've got plenty of money for the legal and any other kind of due diligence costs that are coming. And you have additional cash in the bank to where if you can't get the amount of operating capital from the bank you need, the line of credit, you're still able to actually personally fund that. I think, people run out of cash so quickly, and we've even been overly conservative in our cash position and found ourselves in spots where we're like, wow, this is totally a different situation than we expected. And had we not had 2 or 3x times the cash personally to float really tough times, we would have been in a really bad spot. So I think people come into it a little flippant where they're just like, I took this course or I read this book and I don't have any money or any experience, but I'm going to go buy a business and that's going to be better for me and my family than keeping a W-2. So I
You know,
would say,
Chris, I,
yep,
I,
go
I
ahead.
was brought to mind, I was pitching an oil and gas deal up in Michigan a few years back and pitched the owners. They were going to partner with us onto some development in Texas. And then this engineer walks in the room. And he was I thought, the biggest jerk of all time. Everything that he said, he shot down. Went and got lunch with the owner afterwards. And I said, "What is that guy's problem?" He said, "What do you mean?" He goes, that's exactly why I hired him. His job is to tell me every reason how this deal could fall apart and why we shouldn't do it. And if it gets
Mm,
past him, we know it's a deal worth doing. I say all that to say, if you're a prospective buyer and you don't have that guy, you don't have a Chris Seegers in your corner telling you, hey, here's the risk. If you can get through all of the due diligence of a qualified advisor, then it's the right deal. But going into it with eyes half open, thinking, well, I'm just going to figure it out without fully vetting the deal and having somebody take a very hard, pragmatic look at it without emotion, understanding how your personal goals fit the cash flow of the business, fit the team of the business, factor in the three Ps, you're doing yourself a disservice because 95% of the deals that you're going to look at, you should never buy. And to your point, people just go in thinking, well, I'm going to buy it and it's going to work out. Like, no, spend 10 times the effort on the front end to make 10 times the enjoyment on the back.
yeah, for sure. I just actually, and this is a shameless plug, but I just finished printing Buying Main Street. So it's the second book. Our first book that we printed was Selling Main Street. And they're both primers. They're really to help you avoid spending a lot of time. So, selling Main Street is to help sellers really get prepared, thinking about when to transition, how to transition, and understand, hey, if you want to do it well, it takes you 3 years because you want to build your enterprise value to the point where it's going to serve your personal and wealth needs and then exit, not just exit because you're tired. And buying Main Street is the same. It's just a high level primer, and I'll send a digital copy to anybody free that's interested. But it just, for buyers, it helps you really think through your purpose and clarity, where you waste time, what are the landmines, what are the things you should avoid. And tying this into your comment just now with advisors, you've got to confirm where their incentives lie.
Mm.
And so
Yep.
if you're taking advice from a broker that's selling the business or a bank that wants to get your loan, and they're pushing you to buy the business, just they may be right, right? I'm not saying that they're doing the wrong thing, but just make sure you understand where their incentives are. For us, we want to only represent one side. So if we've got a buyer that we're representing, we're only representing them. And that we want to be like that engineer. We want to be the group that says, hey, I want you to only buy a business that's going to serve you and your family really well. Anything that doesn't fit within that box, and it could just be, hey, this is not a culture fit. You say, do you wanted this culture? You said you wanted this thing. I'm going to be the guy, and our team's going to be the team that's going to say, hey, we're going to keep you honest with what you told us are your goals. And if it doesn't fall within those goals, even if it would have benefited us financially, we're going to tell you, do not pursue that.
Mm-hmm.
So I think that's a really good point is, everybody is incentivized by certain things, us included. So just make sure whoever's giving you counsel is incentivized correctly, because we see a lot of buyers that have deals. So buyers and sellers will come to us and say, hey, we don't really think we need you to represent us. We've already got a deal in the making. And then they go down the road and they realize, hey, they're both incentivized differently. And there's no advisor in the middle to make sure that the transaction happens. And those are 95% fail rate. So we always say, like, even on the sell side, we've got a client right now that's got a potential buyer. And I said, hey, that's awesome. But it would be much better if we had 3 to 5 buyers in the room
Yep.
with different LOIs that you could choose from, because there's going to be some terms there that you didn't think of or they didn't think of. By combining 3 or 4 people in the room, we get a better deal for you. When you have one offer, even when we think about hiring people, if I have one candidate for one of my team members, as opposed to I have 3, like the way that I'm going to communicate and the questions I'm going to ask to one person, as opposed to say, oh, that person had something that I didn't even think was of value to my team, but is really valuable. And I only saw that because I had 3 or 4 different options or opportunities. So just be careful of incentives and where people are aligned.
To that
Greg,
point, can I ask
yep.
you one question? Are there any specific, because you mentioned deal terms, and deal terms is a point that's not harped on enough because I can't remember who it was that said it, but the magic, the make or break, yes, you have to buy it right, but the terms can make or break the deal as well. And as a prospective buyer, if you're the reasons not to buy businesses, are there any deal terms that you've seen that are common from potential sellers or from businesses that you look at and say, this is a red flag as a potential buyer, do not buy this business?
I think a lot of them are more yellow flags that need to be investigated. So, deal terms, number one, the SBA is changing all of their rules right now. So, a lot of the counsel of, hey, the owner's going to carry 100% or 80% or whatever. So, I think getting familiar with what you can or can't do with SBA notes or commercial debt is really important, because there's no reason to send LOIs if you haven't talked to your bank and they tell you, yes, the terms of this LOI we are actually able to do this as a bank or through the SBA. A lot of those terms that you send, you're going to get it accepted. The bank's going to say we can't actually do that.
Yep.
So just confirm that. I mean, your banker is your friend generally, because they don't want to buy a bad deal either, right? They're going to be 90% of the capital stack behind that. And if it fails, it's bad for their book of business. So, talk to them. But yeah, deal terms itself, I think I'm always looking for owners when they transition that they want to transition well. I think there's a group of owners that are just like, it's about the money. And I actually am okay screwing the buyer on this deal as long as I get the right money. So as a buyer, when we put ourselves in our buyer's shoes and we're evaluating deals, I'm always looking for somebody that is speaking language of, I want my team taken care of. I really want my clients taken care of. Now, they should still get the top dollar for their business. Like that should be paramount. But we want this collaborative environment. And once it starts getting hostile, and we had a business we were looking at that was a really big business we spent a lot of time on, it got hostile. And I said, that's it, we're out. Because we still have to onboard this business. And so if that owner in 90 days of getting that deal done, and then 90 days of onboarding and maybe another 90 days, if they're, kind of talking poorly about us to their team, man, we're already going to be so far behind on creating a good culture that it just isn't worth the risk to me. So Greg, let's kind of finish up with some closing remarks. So if you think about top myths and landmines of buying a business, or why to not buy a business, what would be some closing thoughts for our audience?
If you enjoy being home every night and having weekends to yourself, I probably would think twice about buying a business, and I would strongly consider optimizing your W-2 income and potentially having some side hustle. But to buy an existing business and to step in the responsibility of a prudent business owner and operator, it's going to require magnitudes of order more than you think it will. So you got to be very honest about what you have to give, where you're at in your stage of life. If you've got a partner with two young kids at home, and your partner needs your help, or just be real about marrying life, because business is just one facet of life, right? But get very honest with yourself about your capacity. If you're not in a season where you can truly commit to putting the needs of your employees above your own and the needs of the business above your own, because it will call for that, maybe it's not the right time. That would be the biggest one for me, is just, let's get honest about where we are.
I love that, man. I think too, for me, I'll close with, if you don't actually enjoy the suck, if you don't actually enjoy the grind, don't buy a business. I mean, really, because it's not just 1 year or 2 year or 3 years, like it may be a decade or 2 decades. If you don't enjoy that complicated problem solving, when a problem comes out of your business, and instead of you just getting so stressed and having anxiety, but you're like, wow, this is cool. Like, we have an opportunity to solve a problem we've never done before. If you don't like that, if you don't like the grind, I wouldn't buy a business. I would do something else. Now, that is a skill that can be learned, right? That's something, a habit and a skill set you can learn to really just embrace the chaos and the grind and the tough times. So if you're like, hey, I fundamentally believe that the best route for my family to grow wealth and take care of them is to own a business, but I don't have those values, those core values, you can learn them, right, over a period of time. And I put that in my book. Like, these are skills that you can actually learn, but until you've learned them and you say, hey, I've gotten to the point where I have a muscle that says when the grind comes in, when the bad thing comes in, just I can't remember if it was Jocko Willink or somebody else, you say good, right? Like good. We got
Good
someone
Jocko.
quit on us, right? Good. That means we get to hire a new person. We lost a client. Good. That means we're going to go get an even better client. So that's a muscle that you've got to develop. If you don't have it, develop it. If you don't want to develop it, don't buy a business. So Greg, we're going to close there. Really appreciate the time, man. If anyone's interested in our audience on a free digital copy of Selling Main Street, how to sell your Main Street business, or Buying Main Street, how to buy your Main Street business, just reach out and I'll send you one. Love to help you guys. Greg, appreciate you, and we'll catch up soon.
Thank you, Chris.
Thanks for joining us this week on the Exceptional Companies Podcast. Make sure to subscribe to the show on iTunes, Spotify, YouTube, or via RSS so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes, or if you'd simply tell a friend about the show, that would help us out too. If you like this show, please reach out through our website, www.excoadvisors.com, for free tools to order a copy of Selling Main Street, or to sign up for our free webinar on how to sell your Main Street business.